Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video, I'm going to take you through the week ahead analysis. We're going to go through some news and then we're going to go over some charts of interest. So lots of data out this week. We're kicking it off with some manufacturing PMI data out of the US, looking to come in a little bit softer on forecasts. We have seen the trend for the PMIs coming in a little bit lower recently. So, but anything sort of above 50 is considered growth. Depending on what country it's in, of course, depends on whether a country is more developed or not. But above 50 for the US is considered growth. So it is still showing that, but maybe it's suggesting that the growth is slowing down. We then have cash rate, or the RBA rates announcement and statement, looking like a 50 basis points hike here for the RBA. That's very much in line with the Bank of England. Down here you can see the Bank of England also looking to hike interest rates as well. Other US data, we've got the ISM services PMI, again numbers forecasted as a little bit softer. Again, anything above 50 here is generally seen as growth in the market, but could that suggest that if we do get a lower number, that growth is slowing? Finally, then we have the non-farm payroll data. Now, the Fed recently talked about seeing jobs coming in a little bit softer, and they weren't too particularly focused on jobs at the moment. So the main sort of reasons, or what the main kind of focus is for the Fed is employment, okay, but also price stability, okay. Now that's pretty much like inflation and whatnot. But the price stability is something that Powell talked about quite often in the market in the last week's sort of announcements. So they're not focusing too much on employment, they're focusing more on price stability. So these numbers here might come in a little bit softer. You can see that it's suggesting that there's a growth of 250,000 jobs where it was 372,000 prior. We may get a slight bump in the unemployment rate, and average hourly earnings may stay the same. So be interesting to see how the dollar takes that going into this week. Going on to the strength meter then, so this is really showing us the risk sentiment change in the market, because we can see here that the Japanese yen was the strongest of the currencies last week alongside the pound, but the pound was coming from an area of reversal, so we would naturally be looking for that upside to come to the market, whereas the yen really started to take off this week and is now the strongest currency on the currency strength meter. We've had the Swiss franc reverse, we've had the dollar reverse, even CAD has reversed slightly this week, so or last week. So yeah, yen the strongest, showing us that risk in the market is very much on a kind of risk off environment. Although at the moment you'll probably say, well, it's not because stocks are rising. Now usually or typically in risk off environments the yen would strengthen, okay, and the stocks would fall, okay. If I could just spell correctly, stocks would fall. That's not what we're seeing at the moment. Actually, the yen strength and the stock market is actually quite correlated to the upside at the moment in terms of, or positively correlated. So now yen strengthening, stocks are also strengthening as well. Now, stocks could be on the rise because of the Fed basically front running the rates and talking about hiking more, but less rate increases, you know, and the stock market's taking that as a positive at the moment. So yeah, we've got a positive correlation between yen and stocks currently. Jumping onto some charts of interest then, so we're going to kick it off with the pound. Obviously we do have Bank of England data, but this is the daily chart, and what's quite interesting, we've kind of just straight lined on the daily chart. We do have quite a lot of sort of wicks to the downside. However, we had a nice breakout last week, break above 121 and 122. We came into sort of 122.50, which is this sort of bearish candlestick here before price made a significant move lower. And we rejected there. So I'm looking for a higher low basically on the daily chart. The monthly closed as a really strong sort of bullish pin candle. So I'm looking for the potential for price to reverse, and we may get a pullback first before seeing that continuation. So if price was to drop maybe back towards the 1.2, we could see another extension to come, and it might kind of form this larger sort of head and shoulders pattern that we can kind of see here on the daily chart. Going on to dollar yen then, so I don't think this momentum here is going to change much for dollar yen. We've got really strong bearish closes. The previous kind of structure points are down here at 130, 130 or down at 128, depending on how the market reacts this week. Do have a little bit of resistance just up here, 134.48, 134.50s. If price can pull back into that level on this weekly chart, we could expect maybe some further downside to come this week. May overextend that a little bit, may come and test sort of the wick here of the previous week, but that's the kind of area at the moment that's interesting. Going on to euro yen. So euro yen makes sense because euro is the weakest on the strength meter, yen is the strongest, so we want to be looking for further downside to this market, and we are getting those lower lows and lower highs in the market. So looking for a continuation to the downside here. 138.46 seems to be a decent level of resistance, so if price was to come up into that level, I would expect maybe some selling to come in at that point. So looking for potential opportunities around this zone through here. It may extend a little bit higher, we may come up to sort of the 141s, but that would be a very aggressive week. So if it was to kind of breach these 139.50s, I'd say max, then that would be a bit more of a bullish turn. So if we can stay below that, stay below 138.50, I think we'll come see some lower prices. We have this key low down here at 133.10. Finally then, gold. So another strong week for gold, showing us that these buyers are active down at these monthly lows. Just looking for areas of resistance now for price to come into. We have this previous support area at 1786.95. I think if price could pull back this week, we could look for maybe some extensions into that level. If the dollar's going to weaken significantly, we could see breaks above 1800, maybe even seeing price back towards 1880s. That would take a big move in the market, but it's not out of the ordinary for gold to make a large move. But we could look for early target at 1786 if we maybe come back and retest the previous week high, 1740s, reject there, or look for some higher lows on a 4-hour time frame. That could give us some opportunities to trade a little bit higher. So I hope you enjoyed the content. If you did, leave this video a thumbs up, subscribe to the YouTube channel to see some more Forex trading content, and I will catch you in the next video.